Hey everyone, and welcome back to another video for today. So it's already the month of November. Believe it or not, there are only 2 months left in 2025, and so we're going to talk about 4 stocks that are worthy of being on your buy list or maybe watch list. Of course, there are plenty of other stocks that we can talk about. More specifically, the one and the only PayPal. Of course, we are not going to touch on PayPal in this video yet again, because I know that a lot of you are bored of me talking about probably one of the best risk-reward plays in the market. You can disagree with it. That's fine. Just don't buy it. In this video, we're going to touch on these 4 companies. I do hope you keep watching. Without further ado, hit all the buttons, leave a like, comment. Let's start off with Rubrik. Rubrik is a small, although now a bigger position in my portfolio. A cybersecurity name growing quite quickly. They went public mid-2024, worth just under $15 billion. They are currently down 25% from their peak earlier this year. Rubrik took a hit when Varonis and Commvault reported weak quarterly figures, but I still think Rubrik is a better company. Their next quarterly revenue is expected to grow 27.9%, then 25%, and 23.5%. Still, a fast-growing firm, though not yet profitable. Gross profit and margin continue to rise. Free cash flow margin has improved to 17.9%. Operating margin remains negative near 40%, but the company generates solid cash flow. Rubrik focuses on resilience in cybersecurity, helping companies recover after breaches, not just prevent them. Partners include CrowdStrike, Scalar, and Okta, making it a key player in the data recovery ecosystem. Next up, DraftKings, a company currently under pressure due to the rise in prediction markets. DraftKings has dropped 42.7% year-to-date since its peak. Yet, it remains a $15 billion company expecting to report soon. MGM's strong results and DraftKings' acquisition of Railbird show a proactive strategy. Railbird's clearinghouse is Polymarket, which links DraftKings directly to prediction markets. This move could secure long-term growth if regulations favor them. DraftKings' revenue grew 36.9% last quarter, mostly from sports betting and iGaming. While monthly unique players have declined after December, average revenue per user has increased, driven by major sporting events. Free cash flow continues improving, and profitability is getting closer. Gambling in the U.S. is booming, and DraftKings remains a top name despite short-term headwinds. Technically, a triple bottom pattern is forming, making it an interesting pre-earnings play. Moving on to a no-brainer. Meta Platforms. The stock has pulled back 17.5% after earnings, up only 5.7% year-to-date. Despite concerns about higher CapEx and AI investments, Meta's fundamentals are remarkable: a 40% operating margin and nearly 30% return on invested capital. The EPS miss came from a one-time $16 billion tax charge. Excluding that, Meta beat estimates. The main debate is around rising 2026 spending. Investors fear another metaverse-like cycle, but with 3.54 billion daily active users, Meta's scale is unmatched. Revenue is projected to grow 19.1% this year, then 16% and 13.8% in the following years, nearing $260 billion. Free cash flow is set to rebound 32% by 2027. Mark Zuckerberg remains one of the most visionary CEOs, and Meta's data center expansion could lead to a future Meta Cloud Services platform similar to AWS. Lastly, Transmedics, a stock that's back near pre-earnings levels at around $4.5 billion market cap. Shares are $122, down 7.2% today, but still up 84% year-to-date. Q3 growth remained strong at 32.2% year-over-year, despite seasonal softness. Product and service revenue both rose over 30%. The company now owns 22 aircraft, expanding double shifts to maximize usage. Management highlighted kidney transplant technology as the next growth catalyst, with trials expected in early 2026. These trials aim to prove superior outcomes versus current methods, targeting 20,000 transplants annually by 2030. TransMedics is also launching its first European NOP program in Italy by mid-2026, creating new revenue potential. Short-term, gross margins may face pressure, but long-term, this global expansion should accelerate growth and reinforce TransMedics as a leader in organ transplant logistics and technology.